Good morning, Big Wave Trading family. Hopefully I can keep this video short for everyone, as there really isn't a whole lot to go over. Uh, I'm very rarely ever impressed anymore in my life by anything the stock market does, especially this year. This year has been beyond pathetic, and I know that everybody thinks it's great that the market hasn't pulled back 5%, but as long as we don't pull back 5, 10, 20% ever, and we continue this weird V-shaped slow grind upward, with the VIX now back under 10, it's going to be hard to have any one of our end-of-day long positions produce those returns that if you go back and look at my past big winners pre-2008 returned. If you look at those, you'll see the exact same patterns we're going long now as I was going long then. Much different returns, and the success rate is lower. So that's a byproduct of the market. So as long as the market does what it does, yeah, I'm not going to be that impressed. However, following the FOMC meeting, big, huge rally off the intraday lows, closing near the highs across the boards with the Russell 2000, and more importantly, the Dow Jones Industrial Average leading. Look at the IYT, look at the Dow Jones Transportation Average. That's wonderful. I love seeing that. So whenever you have that along with the Russell 2000 nearing new all-time high ground, that's excellent. That's what I want to see. I want to see those two indexes lead. The only problem is, once again, another straight shot V-shaped move to new highs. The only difference is that this time we have above average volume on a lot of these indexes, and some of the days higher, which is kind of rare to see. But overall, the V-shaped moves are not healthy. You want to see like a big up day, a few days sideways, big up day, a few days sideways, big up day. You don't want to see these wedges. You just don't want to see every day up, and the few days that you're down, you're not down much. When you have days like this, and weeks and months like this kind of day happens, this kind of day happens, this kind of day happens, this kind of day happens. These kind of days can only happen following those weird wedging moves. So keep all that in mind. Now getting to the new long positions. The first new long positions is a stock that I was long earlier in the year. Got some pretty decent returns before it failed. Failed probably, I think it was back here. I can't remember. It feels like it failed earlier on me. I might have had some tight stops. I don't know. I don't remember. I don't care. All I care about is right now. VAC, bullish reversal, hammer candle price bar on well above average volume following the kind of what looked like to be a breakdown the day before. So to see it immediately reverse with a big intraday reversal and very heavy volume, that's very bullish to see. Marriott Vacations Worldwide is an extremely high quality CanSlim stock, and it's in every single one of my perfect speculator scans. It's about as good as it gets. Unfortunately, the technical price pattern isn't as good as it gets, but measured position, it offers a pretty good reward risk ratio. We're going to probably have to risk somewhere around, that's way off. I don't even know where to go for the lows here. Sounds right. Yep, 5%. Risk about 5%, and if we can get any part of this previous uptrend, though, you can see that the stock can move a lot. We're looking at over a 10 to 1 potential reward risk ratio if everything goes right. Doubt it. So if you have it, you still have 5 to 1. That's what I'm looking for. The less than 5% risk, we're good to go. So I want to get long VAC, limit order. The high day, 114.25 since not extended, and there's only one cut loss since this low is below this low. I just want to see this low hold. So if it touches 108.99, I'm completely out of VAC. Now, like I said, VAC was in the CanSlim scan, and it was in the Perfect Speculator scan, but it was in no other scan, basically due because of that red bot. So it's technically a 4% position, but if I put 4% of my capital in this stock, I will have a dollar loss amount greater than I'm willing to currently risk, because it's not like we just had that 20% correction. It's not like yesterday was a follow-through day, up 1.5% on the indexes on 20% higher volume. And it's not like this is what the chart looks like after a vicious bear market. This is just another chart that's had a weird uptrend overall in a very weird 2017. So I've got a reduced position size. I think it might even take me under 2% of my account capital to get me to a dollar loss amount that I'm looking for. I'm only willing to lose $200. Per trade on any trade right now. That's the absolute max. The speculatives are right around 100. When you're putting $1,000 to $10,000 per trade, trust me, you're keeping some extremely tight stops. So instead, I reduce size. I don't know. I'll put about $6 grand maybe in this stock, I think, to get my risk to right around that $200. But that's how I'll do VAC. Then DSKEW. This is a unique stock. This is basically DSKE, obviously, and as you can see, it's not that great. Like, it's just not that big of a deal. But DSKEW, because of the green bop in this chart price pattern, because of its uptrend above the 50-day moving average with the above average volume, this thing was on my radar back here as it made my green bop for 20-day scan. It was in some of my price volume bop surge scans and my just overall any price up on above average volume green bop scans. But it's also, now that I'm looking for any stock that's perfect speculator quality at any price, DSKEW is one of 189 stocks out of over 10,000 stocks in my universe of stocks I can scan that's in my perfect speculator any price scan. So DSKEW is technically a perfect speculator quality stock due to its price action. So what I want to do, it was in the perfect speculator scan, 1%, since it's sub 50. If it was over 50, it would be 2%. It was also in the price volume bop surge scan, so another 1%. It's not extended from any of the moving average, so it's supposed to be a 2% signal. But if I use this as my first cut loss or final cut loss, half it here, half it here, half it here, and then do something stupid and half it back here, I'm still risking dollar cost wise too much. So I think what it came out to is it's still going to be a little heavy if I use this stop and this stop. I still risk losing more than $200 on the trade, but I really like this technical chart pattern, even though I'm not quite sure what I'm looking at here. I'm trusting my signals. I'm trusting my perfect speculator scan. Plus, I'm not sure who, but one of my chat room members has made mention that he is long DSKEW already. And the guy, I think if we're thinking about this, if I'm thinking about the same guy, he's got a good knack for technical analysis and charts. So I'll have to find out. Whoever it is, please tell me in the chat room if and when you show up on Thursday. I would like to know, and like to know why you bought DSKEW. But for me, perfect speculator scan, confirm the price volume bop scan, supposed to be 2% of my capital. It'll probably be more around 1.5%. So once again, $6,000 in DSKEW, and the goal is to lose only about $200 max per the trade. So I'll see if I need to go under 6,000. I might need to do 4,000 to 5,000. I'm not sure. I've already entered the order, so the order's good to go on the Interactive Brokers platforms, but I'm going to adjust it if I need to in the morning when I do the math. When I entered the orders, I didn't do the dollar cost loss amount. I just noticed that my original position size, doing crude math in my head, made it too large, so I reduced the size to a nice even number, like 2,000 shares, and then I will go from there and see what I want to do tomorrow morning. But for now, the game plan is to get long DSKEW with a limit order at 157. First cut loss, 136. And I also wrote down 142. So if you want to really reduce the dollar cost, I don't think these two up bars here on this huge volume for these 2 days should really be reversed. So you could use 142 and 136, but I'm pretty sure I'm going to be crazy and use 136 and 128. I just want to let you know what I'm doing. I don't recommend it. At the same time, I might just use 136. I'm not quite sure yet, but since I'm already using only one stop with VAC, chances are I might put on a full position, well, or at least 1.5%, not 2% fully, and then just use the one stop at 136. All right, everyone. I'll see you in the chat room. Good luck.